Hey guys, thanks for jumping back into the cryptoverse. Today we're going to be talking about Bitcoin. It made quite the move today, so we're just going to be looking at what that could mean for the days ahead. If you guys like this content, please subscribe to the channel and turn your notifications on by clicking the bell icon. If you want to discuss these charts and talk more about cryptocurrency, then please check out the Telegram channel in the description below. So we've talked endlessly about the 200-week moving average, the 100-week moving average, and the 20-week moving average. The 200-week moving average historically has been our support line, sometimes with candles, wicks going below that support line. The 20-week moving average is our bull market is on line. So basically, when Bitcoin is above the 20-week moving average and it can hold it as support, then the bull market, can start gearing up into action. The issue so far during this market cycle is that we have been unable to hold the 20-week moving average as support. You can see that we tried to hold it here at $10,000 and we did not hold it. When we failed to hold it, we instantly dropped down to the 100-week moving average. We then bounced between the 100 and the 20-week for many, many months. When we broke above the 20-week, a lot of exuberance returned to the market. Altcoins were shining, and then we came back down to the 20-week. And here we tested it again, but this time we tested it at a price point $1,500 lower than we did at $10,000. Unfortunately, we were also unable to hold it, and this time when we broke, we've mentioned before that when we break the 20-week, we usually just drop. And you can see this break dropped us to the 100-week, and this break dropped us straight to the 200-week moving average. Now, the reason why this is important and the reason we're making an updated video is because a few weeks ago, for those who follow the channel, back in March, early March, mid-March, we said, okay, it looks like we're holding support on the 200-week moving average, and we would expect a move up is our most likely scenario to play out. Once we saw these candles printing, and we said the next likely move is to move up to the 100-week moving average, and that has now happened. And so it was basically a 26% move up to the 100-week moving average. So this was just something we said about a month and a half ago or so, saying that this is the most probable way forward. And a lot of people get suckered in to day trading in this region. I think a lot of those people end up losing money. This is not financial advice, obviously, but you have to remember that this is a zero-sum game. So, if someone's making money, someone's losing money. And if you're new to the markets, or if you're just like a regular guy trying to, you have your 9-to-5 job and then you try to come home and day trade, you're going up against, complicated bots that are programmed by very smart people, and they are much more objective than you are. And so really what I think retail investors should be focused on are these longer term moves. When we get to the 200-week moving average, that tends to be a support line. Okay, you can see it here in this cycle. It happened back here, back in earlier in this market cycle, and it's also happened in prior market cycles where the 200-week moving average held support. We've also said many times that the 20-week moving average, when we're above the 20-week moving average, then we are in bull market mode. Okay. Now the reason we're making this video is because we've made the move to the 100-week moving average. We provided a video update on that. And now we were looking to see, okay, what way are we headed? Okay, clearly Bitcoin decided to go up because you can see that the next candle here has gone up with a wick, and guess where the wick went to? It went straight to the 20-week moving average, like straight up to it on the nose is where the wick went. So the next level of key resistance that Bitcoin needs to break before things can really get moving again is the 20-week moving average. Once we break it, it does not mean we're out of the woods. We need to hold it as support for an extended period of time. We need to hold it as support for months and months and months. Like the last market cycle, you can see us holding it as support time and time again throughout that bull market. We want to see that happen again. We want to get above the 20-week moving average and continuously hold it as support for months to come. Now, clearly, Bitcoin has already gone up to the 20-week moving average. So for me, a lot of people say, well, what are you doing, Ben? I'm watching the 20-week moving average. Okay, so most of the time most of the time when we're below the 20-week moving average, the majority of my portfolio is in Bitcoin, and Ether. Um, but when we get above the 20-week, a majority is still in Bitcoin, but I tend to allocate it, or I tend to move some of it into other coins. The reason I do this is simply because it's based on historical patterns. It has nothing to do with what I exactly just emotions or anything like that. I'm just basing it on what the math, what the historical cycles show us happens typically when Bitcoin gets above the 20-week moving average. So typically, I'm just going to show an example of two different coins. So historically speaking, this is a graph of Ether. So if you're familiar with Ethereum, which I'm sure many of you are, I just want you to take a minute to process this graph if you haven't seen it yet. So the red dots are when Bitcoin is above its 20-week moving average. The blue dots are when Bitcoin is below its 20-week moving average. So you can see when Bitcoin is below its 20-week moving average, Ether tends to go down. When it's above it, Ether goes up. When it's below it, Ether goes down. Again, you can see even in this market cycle, when it's above it, Ether tends to go up. Pretty much almost immediately after Bitcoin gets above the 20-week here and here, even in the accumulation phase. But when we go below the 20-week moving average, this is when Ether tends to go down. You can see it here, here, and here, and then here. So 4 different times. 1, 2, 3, 4. All 4 times that Bitcoin broke the 20-week moving average, Ether immediately went down. This is just looking at historical patterns. I'm just simply the messenger of the data. You can do what you want with this data, because obviously this is not financial advice, but I'm just pointing out what the data shows. Here's another coin. This is Chainlink. If you're not familiar with it, I would suggest getting familiar with it because it has outperformed Bitcoin by 10x during the bear market. So the red line is when Bitcoin is above its 20-week moving average. So this line and this line and this line. When Bitcoin is below its 20-week moving average, what does it do? What does Link do? It doesn't do much of anything. Now, remarkably for Link, it tends to actually stay more or less the same. A lot of coins tend to really drop during this time. But these are just 2 examples of many that I could show you. There's so many coins out there that are, that I do think are legitimate projects. Most coins, most altcoins, will die. 99.9% of them will die in the end because I don't think the market can support that many coins. But in the meantime, I just want to point out these patterns to you. We could argue all day long about the merits of various coins. All I'm doing is just, I'm just the messenger of the data, and I'm showing you historically what at least Ether and Link have done when Bitcoin is above its 20-week moving average and when it's below it. You could also look at many other coins and you would see similar patterns. Not all coins, but many coins, especially ones say in the top 10, top 20, will have very similar patterns to this. And even Link, if we plot the Link valuation against Bitcoin, this is above the 20-week and below the 20-week. So you can see again, with respect to Bitcoin, Link is gaining value significantly when Bitcoin has historically been above its 20-week moving average. So does that mean, you should go convert your Bitcoin to other coins? No, it does not. There's perfectly a good argument to just continue to accumulate Bitcoin. It is the market mover. It is a good index to have in your portfolio. If in 3 years there has been a bull run, you can be almost assured that Bitcoin would have been leading that bull run. Whereas you will not be assured that any other coin in the market will also be there with it. There's obviously risks associated with every coin, but if there is a bull run, it's because I think Bitcoin is primarily leading that charge. Okay, I think Bitcoin will lead the charge, and then some coins will follow. So getting into any other coins is certainly a huge risk, but I'm just pointing out what the data shows, historically speaking, when Bitcoin is either above its 20-week moving average or below its 20-week moving average. Now, one of the key comments that I often get is, well, how do we know, like, what is a good time to convert? Like, what if you want to diversify your portfolio a little bit? Um, and it's a tough question because it depends on what risk you're willing to take on. Personally, I like to see the weekly candles above the 20-week moving average. So if you see the wick come above it, some people might say, okay, should I do this now? And you can, but there's just there's a higher level of risk involved because we could do something like this. So this is a great example. Back in October of 2019, you can see we had a wick to $10,500, which was around $500 higher than the 20-week moving average. But this was not a candle, this was a wick. And ultimately, we actually came straight back down to the 100-week moving average. Okay? And during this time, a lot of altcoins really bled a lot, which is why it's almost always great. It's almost always the best case scenario to have Bitcoin, your primary holding in Bitcoin, during the bear market. And obviously you can point to some altcoins that perform better. I mean, Chainlink has been one of them. But for the most part, if you look at 5,000 coins out there, Bitcoin tends to perform among the best when we're in a bear market and accumulation phase. And that is the phase that we are in now. And the reason that is the phase we are in now is because we have not held the 20-week moving average as support for many months, which is what I think needs to happen before the bear market can get into full gear. Okay? So remember this. This is a key thing that could happen. If we see a wick go above it and you choose to diversify, you are taking on a lot more risk than if you say wait for candles to close above it. So here's a good example. The wick going above it, and then we ultimately got rejected and came down to the 100-week moving average. In this case, the candle closed above it. And once the candle closed, then we kept going up. So there's a key difference there between, at least historically speaking, whether the wick closed below it or the candle closed below it. Now, I'm sure you can go in time and find some random example where something slightly different may have happened, but that's not the point. The point is to show that for the most part, you want to reduce the risk, at the same time potentially missing out on some moves, and this could involve people who are not even in Bitcoin now, but maybe they're in a stable coin and waiting to get back into the market. If that's the case, then maybe you're just looking to get into, say, Bitcoin once it gets above the 20-week moving average and to capitalize on a move like this. So again, we're looking at the 20-week moving average. It's entirely possible that we hold it as resistance and come straight back down to the 100-week at $7,100. We could be in this range for a very long time. I don't have a crystal ball. I don't know what's going to happen in the short term. It's even possible that we come back down to the 200-week moving average, which is down at around $5,700, $5,800 or so. So just remember that nothing in the short term can be predicted rationally speaking, and whatever you do does incur a level of risk. So again, what I'm looking for to sum this all up, I'm just looking for the weekly candle to get above the 20-week moving average, and if that's the case, I will probably get more into the market in terms of say buying Bitcoin, buying other coins that are, say, in the top 10 or thereabouts that I think are going to see a significant move. And the reason is because based on historical data, it suggests that these coins do have considerable moves once we get above the 20-week moving average. I'm sure many of you are sick of me saying this, but I just feel like I have to say it over and over again for people to truly understand, because until you've lived through the cycle many times, it's really hard to actually know what it's like. It's one thing to just look at the data and say, oh yeah, that makes sense. But if I tell you about it constantly for months and months while we're living through this cycle, then let's suppose we ultimately go onto a bull run for the next 3 years, and then we have another long bear market. Then you're gonna be more knowledgeable and have a better idea of what to expect than if I just told you one time of some of these patterns. So again, I know I've rambled on a little bit. I hope you guys enjoyed the video and enjoyed my take on it. I hope it has been useful to you. If you guys like the content, please subscribe to the channel. Check out the Telegram channel in the description below. And if you wanna support the channel, you can find ways to do that in the description below as well. That'll wrap it up for this video. I will talk to you guys next time. Bye.